Hi, I'm Irina, a local realtor in Hawaii. Welcome to my YouTube channel, Irina on Hawaii. This video is part of financing series where I'm talking with a mortgage broker about common questions buyers and homeowners have. Today's topic is loan options.
Thank you, Irina. We appreciate being part of your interview here. My name is Kurt Nielsen. I'm the owner of eMortgage Hawaii. I've owned and operated a brokerage in Hawaii we're going into our 23rd year. Um, and I do have an MBA in finance and a master's of science in economics. So I'm good at numbers. And I'd like to introduce our new branch manager, Alex Provence. She's our branch manager in Kona.
Hi everyone, I'm Alex Provence, in Kona here for a couple of years now.
Hey, we'll turn it back over to you, Irina.
On your website, Kurt, you mention that mortgage brokers sometimes work with 25 to 30 lenders, and you have like 300 different loan programs.
That's right. That is right.
So, what types of loans do you offer? Are they loans mostly conventional, or do you also offer FHA, USDA, VA?
Offer any loan that all of the lenders combined that I work with offers. So I'm just a reflection of them. Being a broker is, I think, more advantageous to the client because I can go anywhere. I have a software system that can find the lowest priced lender in the United States. And if I'm not signed up with them, it takes me about 24 hours to get signed up with them. But getting back to the loan products, like I mentioned, there's probably over 300 loan products. And there are a lot of brokers that only offer one. They offer the 30-year fixed conventional loan, and they haven't really done anything else. So we not only offer conventional loans up to 1,238,000, but we also offer all the government loans. That's FHA, USDA, VA, but then there's so many other loans like land loans, construction loans, reverse mortgages, jumbo loans. We make sure that whatever loan we put them into, that they can afford it. That's the most important thing. We don't want to put somebody in a loan that is going to be a struggle for them to continue paying on month after month. So
The most common questions I get from buyers are which loan requires the least down payment, and are there any limits on how much a borrower is allowed to put down?
VA loans, you can go up to 4.5 million with 0% down. USDA loans are 100% financing. Those are quite limited. Most people don't fall into the USDA bucket, but you can do that. If they don't fit into that, then we can provide a 100% loan up to $1 million. So if they're
Okay.
buying something less than $1 million, we can do 100% financing. The key that I think people hear, you need to put 20% down and not borrow more than 80%. That's in order to avoid mortgage insurance. So it's always advisable if you can put 20% down to do that because you don't pay mortgage insurance and that can get kind of expensive. Now we can avoid mortgage insurance if you if you put 10% down by putting an 80% first and a 10% second. So that's one way to avoid mortgage insurance. We always try to do that because again, mortgage insurance, in my opinion, is a waste of money. But if you do get mortgage insurance, as soon as the loan to value drops below 78%, you usually can get rid of it. So just keep that in mind. But for those people that have good income but not a lot of cash, we have lots of options.
Can a buyer use two loans to buy a house? For example, a personal loan for a down payment and a mortgage for the rest of the purchase.
If you're looking at doing a personal loan for the down payment or closing costs, those loans are very limited in amount. The interest rate isn't very attractive normally. So what we try to do, you can do a first mortgage and a second mortgage and get to 90%. If you really do need 100%, as long as you're under $1 million, we can do 100% up to $1 million, but then you're trapped into that mortgage insurance. So every person's situation is a little different. And a lot of times, when we ask, hey, would a family member give you a gift or any relative? So, sometimes there will be somebody in your life that wants to help you get kick-started into real estate, and there may be a gift involved too. So we can do that too. Where there's a will, there's a way.
My husband would say, take a personal loan and do whatever you want with it. So thank you that you mentioned the downsides of personal loans and also alternatives to personal loans. So here is a real world scenario. If a client is looking at a $700,000 home, has $50,000 for the down payment and doesn't want to pay more than $3,000 a month, what types of loans might be available for them?
This client of yours has a budget of $3,000 a month and an appetite for a loan that really is about $5,000 a month. So when you're looking at just setting expectations, it's always good to have the client say, my ouch point is $3,000 a month. I just can't, I wouldn't sleep at night if I had to pay more than that. So then we kind of reverse engineer that and say, okay, well, if you've only got a budget of 3,000 a month, then you need to shop for a home maybe more like 450 to $500,000. And to do rough calculations, every $100,000 you borrow costs $600 a month. So if your budget is 3,000, well, you can't borrow more than 500,000, but we haven't included taxes and insurance. So really, you can only buy a home maybe like 400 and borrow 450,000 or so, and you got to add in the taxes and insurance. So in that case, they're going to be shopping for a much smaller home. Now, there is a circumstance where if the property that they're buying, let's say they can qualify for the $700,000 home, they just don't want to spend that much. Maybe that property has some rental opportunity, like an ADU, an ohana, where they can rent out the basement or part of the property where each month they're only paying 3,000, but maybe the mortgage is 4,500 or something like that. So we find that quite a bit in Hawaii, where people, in order to be comfortable and afford a property, they're renting part of it out. So that does happen.
I understand. If someone wants to keep their payment around $3,000 on a $700,000 home, they have two options: put more money down and borrow less, or offset the payment by renting part of a house and using rental income. The next question, is it possible to get a mortgage for a foreclosed property?
Absolutely. So we don't distinguish if the property has been foreclosed. It's just got a different owner now, and that would be the bank. So the bank has now taken over the title to the property. So the seller is just the bank. So to us, it doesn't matter. You get the same mortgage, same qualification process. It's just a different seller. So a foreclosed property doesn't mean anything from the lending side of things. We don't care. As long as the property is in good condition. If there are hazards or safety issues with the property, those would have to be corrected, or we could do a renovation loan to help you correct those things after you buy the property. But that would be the only thing that I would worry about.
In this video, we learned how a mortgage broker helps, what loan options are out there, and what choices you have. Over the next 7 videos, we'll break down some Hawaii-specific topics. They are lava zones, vacant land, ADUs, leasehold, permitted versus unpermitted homes. The next up is lava zone financing.